Morning, everybody. It is 8:10 a.m., September 25th. Welcome to my channel. I think September might be rearing its head. Okay, keep talking about September is the most seasonally bearish month of the year. It always has been. We've been making all-time highs, right? Remember, I keep saying, is September still here? It doesn't end in trading till next Tuesday. Is it going to bear its head? No pun intended. Okay. Just to give you a little reminder here, let me pull up a seasonality chart to show you. This is, I think, 10 years. Okay, this is 10 years. Let me show you. See how we usually bottom in September. Okay, in September. Look at this year is the purple line. See how it's away from the norm? Normally we start we get a nice July and then we bottom into September. Sometimes we bottom in October, but basically this is supposed to be the most bearish month. Okay. Now the gray bars are volume, so next month should be a nice month because you get a little bump in volume in trading. See how the beginning of the year has nice volume, March specifically, and then you kind of just go down in the summer and you start to peak back up at the end of the year. So we're getting into the nice trading. Now December sometimes is not the best. November you have Thanksgiving, but December you have Christmas. It gets kind of weird, but this is what I'm talking about. Usually bottom here. Again, that's seasonality. It doesn't mean it has to happen. Okay, this year we actually bucked the trend in here too. Usually March, look how we got so weak in March. That was because of tariffs. Okay. And we're supposed to have a week. Let me see here. There was yeah, May. You're supposed to sell in May and go away. That's another month. See how we generally are here? We were here, right? So it doesn't have to be exact. Okay? It doesn't have to be exact. Just wanted to share that with you to make sure I keep saying it. I just wanted to drive home this right now. We are gapping down right now. Okay? These charts look pretty bearish to me. If I'm looking at supply and demand and how we've been moving, it's been a steady downtrend from the all-time highs in our hourly chart. We'll get into that in a little bit. Okay. Today we have a lot of Fed speak. Today we have 8:30 of GDP. Sometimes that causes something, sometimes it doesn't. We have jobless claims. Okay. Tomorrow we have core PCE, the Fed's preferred gauge of the inflation. Okay. We are gapping down into a big level in ES, that level 6670. We'll get into that later. We just put our little toes in the gap, an unfilled gap into the NASDAQ. Now, unfilled gaps, right, are not filled during the overnight session. Okay, that's very important. You don't fill a gap in the overnight session. You fill a gap in real-time trading hours. So it did dip its toe in it, and now we're getting some love here, right at a key support level in the NASDAQ. All right? Right at a key support level. Now, I was live yesterday with a couple of members in my community, right? And if you heard my stream yesterday, you heard me talk about trading is very difficult. Okay? Trading is very difficult. And yesterday, what did I say? We needed to lose 67.10s. And that would change. That was the mini bull bear line. Okay? For the recent trading. Well, we hung out there and chilled there for a little while. Probably almost an hour. Okay? Once we broke that, we fell, which was expected. And I was saying this play by play, not sure if documents or Amalio is here to confirm this, but they will if they watch it later and they can put it in the chat if they're delayed. But I literally said yesterday, play by play of what happened. Okay, I'm going to show you real quick my trigger chart. So let me just pull that up here. I'll get my trigger chart up and I'll show you exactly what I was saying. Why am I not seeing it? Give me one sec here. Should be able to pull that up. Here we go. Here we go. Okay, so look at this trigger chart. Okay, you can see my mouse. All right, so when we were here, we were coiling up, right? And why was that important? Because if you look to the previous day, look at all the trading was here, right? So what I was saying was, okay, guys, we're sitting here because it's the most traded price of the rolling week, and it was the most traded price of yesterday right here. I said we're going to get a big move. However, this was the range right here, okay? And I said this is going to be a big move. Now, there was a poor low like here in the prior session. I said if we come down and break that, we're going to fall and cascade down to 66.95 right here. Okay, I said the next stop would be 66.70. But right here, I really didn't. Now, the retest of VWAP here, right in here, that was probably, and hit the close, that was probably the best bet. And you really didn't get some kind of impulse lower. That's what I like to see, to pull back. You really, usually what I like to see, a push away, then a real big pullback, and I didn't get that, right? And then the market just started dumping, right? And then, right, the market, give me one sec here. I'm just going to switch away real quick. The market here, right here, right? Give me one sec. It just couldn't go lower, right? You got that pop, and then it was like, just couldn't go lower, okay? And there's a reason for that. I'm going to share that reason with you, okay? Just give me one sec while I bear with me for a second here. Okay, so it couldn't go lower. Why is that? Okay, I always got the whys for you guys. Market internals. Okay, now that was pretty weak reading. Now, that was a pretty weak reading. However, if you look at the ADD, the advanced declines, okay, now this is on the previous day's close, but check these numbers out. S&P 500, remember there's 500 stocks, only had 72 stocks declining. That's pretty close to zero, okay? So that means the overall stock market was not very weak. Look at the NASDAQ 100, minus 15. Parity would be zero. That would be 50 stocks up, 50 stocks down from the previous day's close, minus 15. Those are very benign numbers, folks. Okay, even the NASDAQ exchange only was minus 606. That's like out of 3,000. NYSE 704. And actually, at one point yesterday, this NASDAQ, this is the vol D, this is volume going into up stocks versus down stocks, was a 1-to-1. Same with the NYSE, a 1-to-1. That shows me the market wasn't that weak. Okay? That's your overall market wasn't that weak. Now, you do have some highlights in here. Consumer discretionary, that was your Tesla, Staples, energy. This is what I'm talking about, right? Don't get me wrong. The market was weak because our market moves on market cap weight. That's the bars, right? That's how our market moves. if you really want to see something here, let's go into one more thing. Okay. The one more thing is, check it out. I'm going to show you SPY. We know what happened yesterday. Took out the last 4 daily candles, right? Let's look at MAGS. MAGS is the MAG 7, the Magnificent 7 stocks daily chart. Okay, pretty similar to the SPY. It took out all these candles, right? And hit the 9 EMA daily. Now, in the live session I had yesterday, I was talking to documents, and I said that 9 EMA daily, when you hit that, it looks like it usually wants to cut through it, and we usually close above it. Look what we did. Okay. Usually the first test of that, you close above it. Right? So just crazy, right? Now, if we look at the Dow shouldn't have been as weak yesterday. Yeah. So the Dow did it take out? What did it take out? 1 day. Didn't even take out 2 days. You see what I'm saying? Don't get me wrong, that's not bullish, but it didn't just rip through 4 days like the SPY did, right? And Nasdaq was relatively weak yesterday, right? The Qs. Let's look at the IWM. That's the small caps. How did they do? Took out the previous 1 day. And again, that's not bullish. Just showing you the difference, right? Just showing you under the hood. We weren't as crazy weak. Let's look at RSP. That's our equal weight. Let's see how this daily chart. Remember I said it's an ugly chart? What did we do? We just broke the previous day's lows. You see what I'm saying? All we did is break the previous day's lows. That's it. We didn't take out all these candles. That's what I'm talking about. Okay. However, today, we are looking like September is rearing its head. Where are we now, folks? Where are we now? We are at 66.70 right now. That is the level to watch today. 66.70 is the most traded price of the rolling month. I am not shocked that we're here. I will be not shocked if we open here. This is your barometer, folks. This is the bull bear line macro wise in our markets. In our market. If we lose that today, we're going down. And it's going to be swift. If we lose that today. Trust me, that is not a level the market should lose. Okay? Now, to the left, what do you see? You see, let me get my marker out, the unfilled gap here. That's your NASDAQ. Your NASDAQ tipped its little toe into this unfilled gap. There's a void underneath the NASDAQ. There's a void with that gap that if it breaks and goes and starts to get momentum, it's going to fall pretty hard. Okay, we'll get into all that. I just wanted to give you all that of what's going on. All right, let's get into this now. Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets. Along supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. That's how I make a game plan. I also use market internals, anchored VWAPs. Market internals help me when the market opens, tell me who's leading, what's lagging, give me a game plan. Okay? Now, look at that little delay. I had a little brain fog there. Hopefully, you join me every morning. Okay? I'll give you the market story. Let me be your morning cup of coffee, tea, water. Let me be your podcast. Put me on. You'll know what's going on in the markets. All right? If you don't know anything, what did I just say? You have a 401k. If you have any kind of portfolio and you manage it, okay? generally September, and we could get some weakness into October. Okay, that's generally what happens. 6670 is that level. I just gave it to you. All right, /ES on Thinkorswim. Put it on there. Look at 6670. Okay, you do not want to lose that level. Right? It looks like we're going to, but I don't know. I can't predict. I only could tell you if we lose that level, it's not good. Yesterday, what did I tell you? 6710. We lose that level, it's not good. Look what we're doing. Look what we're doing. Okay? Now, if you want the in-depth, you want the play-by-play, well, what do you think you're going to do? You're going to join my Discord. Okay? That's Confluence Trading. Go to the YouTube homepage, click on the link, sign up. What are you waiting for? What are you waiting for? Now, yeah, recently I've been going live. Okay, so my commentary, videos and audio, I'm live. So like that's why I'm not updating as much. If I'm not live, then you get more audio, you get more. But I mean, who would want? Why wouldn't you want to just be up like yesterday? I was talking about the 6710s. I said ticks are. This is what I said yesterday. Ticks are holding below zero, bearish. Internals under zero and trending lower, bearish. XLC, XLK weak, bearish. However, ES defending 6709, well now maybe not. So this was your ticks. When you paint red consistently under zero, that's bearish. Okay. We were just balancing, but the internals were deteriorating. And then you had XLK, XLC at the bottom of that list. Okay. Then I was looking for a pop to short. Now, in retrospect, when I said play by play what would happen yesterday, and like I said, Amalio or documents can confirm that. It's not like I would lie about it. But it stinks, basically. Okay? It stinks when you nail it play by play and I don't have money to show for it. It stinks. Okay? It's never a great feeling. It's just not. Right. So documents knows I hit it play by play. I mean play by play. Okay? So now I'll give you a little, that's why I like to be transparent. I'll give you a little journey into my head, what I'm thinking. Now, recently I've been doing an execution strategy that pays me 3-1 on my risk. Okay? What does that mean? That means that I'm probably not going to get a crazy amount of winning trades sometimes. I'm going to get break evens. I'm going to get excursions on my trades, and then I get broke even or I get stopped. Right? I don't have to have a high win rate. But that is not fun sometimes when you keep getting excursions and you don't get money. You don't have money to show for it. Right? And what I've been doing lately is my setups haven't been coming in this environment. So I sometimes can get super focused, laser focused on doing a day trade, right? Because I'm waiting, I'm stalking like a sniper. All right. However, I have a lot of tools that I sometimes forget about. Okay. So I think what I'm going to start doing is implementing my SPX, pretty much credit spread advanced options, after a certain time. Okay. Because recently my setups haven't been showing in the time that I want to trade. Now, if there's high volume after 12, I'm all about it. Okay. It's also mentally taxing when you're watching the market past 12:30. So what I'm going to say, and in my channel, what I'm going to do is I have a really good sense of the markets, right? How they move, what's capable of. So if you know anything about credit spreads or advanced options, like all the stuff I can do, broken wing butterflies, unbalanced credit, there's a bunch of different ways you can do stuff. Okay, just to give you a quick difference. Okay, a quick difference. I'm just going to show you the SPX. Okay, that's what I would probably use it on. And I'm going to just really quickly, I'm not going to take a long time. I'm just going to draw a little thing here. When we were here, okay, I'm going to show you what I could have did in SPX. When we were here, right, we were consolidating. I was saying in my channel, oh, we're going to go lower. I have no doubt we are going to go lower. Do I know when? No. So in the advantage of credit spread, when you're a seller of options, okay, is you don't have to be right on direction. That's the beauty. You don't have to be right. Okay, so when I didn't get my setup, I should have used my tools like a Batman belt and should have been like, you know what, I don't like the day trade setups here. I should have been like, you know what, but I like a credit spread here in SPX. So let's say when we're here, right, all I would have had to do is let's just say the 66.70s or 66.65, right? In credit spread, all I would say, and don't worry about it if you don't understand, all I'm going to say is this: I would have sold calls at 665. Let's just draw a line at 665. Okay? If I did a spread that said I'm a seller there of call options, what I'm saying is the market cannot be above this line by the close, and then I collect my money. So when you're a seller in options, you could be right if the market moves sideways, if the market goes down, right? Even if it went back up a little bit. If it just did those three, I'm collecting a whole profit. That's the beauty, right? Because I felt like this was going to happen. I had good conviction. There's other spreads that I could show you that were even cooler, but that's the gist of it. So I really have to, and I have set alarms on my phone. I have to switch my brain, okay? Because there's many tools, ways to look at this market. As soon as I'm hope documents can remind me, or Amalio, or whoever, Rosita, or Hal, when he's in my channel, can remind me if I'm saying, I'm not really liking this. I'm not really, but I have a directional bias like that strong. I should do it SPX because I don't have to be right on direction. It's very powerful. Okay, I'm probably going to start doing that live, and you can see how I do that. Okay, just wanted to share that with everybody. Like I said, I'm going to be transparent, and then we're going to get into it. All right, we're going to get into it. So let's start with futures. Now we're gapping down, folks, and we tested the 66.70s and we're falling again. Now I think we're going to play around 66.70s. I think that's where we're going to open. But let's see. Let's see. Now, who's leading today? The VIX. The VIX is up 5.56%. That's not a shocker. We're gapping down. All right, gapping down. Silver's up. Ooh, silver. I'm loving that. I'm a nice, proud holder of silver. Ooh, I'm loving that. Up 2%. Loving it. 10-year yield's up 0.87. Gold up 0.25. Dollars up 0.22. The Dow is down 0.15. This is the 30-year bonds down 0.19. ES down 0.41. Crude is down 0.55. Nasdaq's down 0.58. Russell's down 0.79. Bitcoin's down 1.71. Ooh, Ethereum down 4.21%. Okay. So, moving on. Mag 7 Plus. Who's the leader? There is none. Berkshire Hathaway is flat. We're going to go to the 1%ers. Nvidia down 1.06%. Guys, remember what I said, just to give you a reminder. Apple hit expected move on Monday. That was it for Apple. Okay? That was the highs for Apple. Isn't that funny how that works, huh? Amazon hit its expected move to the downside the other day, right? Notice Amazon's not down as much as the rest of the pack. Okay. Now, one percenters. Nvidia down 1.06, Google down 1.27, Broadcom down 1.27, Tesla down 1.56, AMD down 1.67%, Coinbase down. Now, documents. Amalio, if you're there, documents is there. Okay. We went over something, I don't have to go over it, about the 5-day simple moving average, a tool Brian Shannon likes to use. And I showed the power of it, right? You can real quickly see what's coiling. Now, documents. Remember what we saw about AMD? AMD was literally coiling, going flat. That could have a huge move lower now. That could be a huge mover to the downside. Same with Coinbase. Same with Coinbase. Okay? Same with Coinbase. Now today I'm a little bit all over the place, but I hope everybody's following me. Okay, and I'm going to show you really quickly what I'm talking about, just so everybody understands. Okay, I'm going to show you what exactly I'm talking about. I'm going to bring up AMD. Give me one sec. All right, so AMD coil. Let's look at it together. All right, this is the coiling. The most traded price of the last month. Look at that volume. That turquoise is the volume. How much volume has been over the last month? 160. We are at 158 right now. Pre-market. I show you pre-market right now. Boom. There's the extended hours. Look at the market, right? Right here. The market's pushing away. Pushing away. There's your month-to-date anchor VWAP. If we break, this is going to be a big move to at least 150. Okay? Now, see the extended hours make the 5-day moving hour, that white line, a little jaded. So that's why I don't like having it on extended hours. Okay? This is a coil, folks. One other one I'll show you. Coinbase. Coinbase was also coiling and flat. Okay? A little flat, right? A little coiled. The most traded price is 304. This is a real fast mover. Okay, we closed yesterday at 321. We're at 314. We're right here. Notice all of the volume here at around 325s. If you crack that, if you break that, you are going down, folks. So at least 304, that most traded price of the month. Okay, that's how you use that. Now we're back to futures. All right. Coinbase, your laggard. Okay. Top sectors. Anything to note? There is today. We have some 1%ers. Snowflake down 1.2%, 1.20%. Caterpillar. Industrial down 1.23%. Qualcomm. My Qualcomm finally broke out of the 161s. Had a nice big up day yesterday. That's no surprise. Some profit taking happening there. Okay. Profit taking. Now notice the top of this list. Notice the top of this list. Notice the rotations. PepsiCo. That's a staple. That's a staple. Okay. Costco. That's safety. Walmart. Safety. People are going to rotate their money into these safety plays. Let's look at the granular list here. Let's see who's moving markets. There's not a lot. IBM had some news. We'll get into that later. Up 2.79%. That's the only highlight, folks. Let's look at the laggards. Woo! My lord. Oklo's a nuclear play. Nuclear energy. Okay? Down 15%. Now the company doesn't make money yet. That's what happens when a company don't make money. Now maybe there's something else I don't know, but I bet you to any money that's profit taking. Let's see the next one. SoundHound, that's kind of tied to Nvidia. IonQ, that's quantum computing. Had quite a meteoric rise lately. That's profit taking. CoreWeave, profit taking. Carvana, down. VRT, I talked about this yesterday. VRT, data center build out, cooling, electrical, power. Okay, people taking some profits in these particular stocks. All right. Moving on. Moving on to sectors. Notice your laggard, folks. Semiconductors. All right. That's a telltale sign. Risk off. Risk off. Who's the leader today? Well, it's not really a shock. People are going to put their money into staples, the safety play, into healthcare, right? So staples are up 0.23. Healthcare is flat. That's basic materials, flat, right? Real estate, flat. These are all more safety. Utilities, only down 0.06, right? But we get lower, consumer discretionary down 0.44. Amazon, Home Depot, and your Teslas. XLK is your Nvidia, your Apple, your Microsoft, down 0.77. That's your big boy. And then your risk on, risk off indicator there is the semis down 1.19%. They are getting slammed this morning. And the market's losing the 6670s. Your Nasdaq's going into a gap, making a gap. Right now. Right now. Okay. So we got moving in our markets, folks. This is September, most likely finally rearing its head. Okay, been talking about it, been talking about it. All right, let's move on to economic calendar here. GDP came out. Maybe that was bad. Maybe that's why the markets are going a little down. Let's see. Let's see those numbers. Let's see here. GDP. GDP was better than expected. All right, that doesn't mean much. GDP, all right, let's see. Initial jobless claims, let's see that. We were expecting 235. We got under it. All right. Then we have Fed Williams speaking at 9. Existing home sales at 10. Fed Bowman at 10. Now, Feds really haven't moved the markets besides Powell. These guys who've been talking really haven't really moved the markets much. Tomorrow, core PCE. Let's go on to the juice. What we got today? Fed Mirren speaks at 8:15. Goolsby at 8:20. We got any Trump today? Let's see. Trump greets Turkey's president, Erdogan. I think that's how you say that. Trump and Turkey's Erdogan bilateral meeting at 11. Great. Trump's talking at 11. Great. Fed Bar. Trump signs executive orders at 3:30. Trump meeting with Pakistan at 4:30. Okay. All right. That's what's going on there. Let's see if there's any risk here. U.S. equities remain on the back foot after 2 days of losses. I think that meant to say as traders waited for new drivers to guide the market's move. Great. Moving on to stock news. Intel stock gained 1.9%, continuing the previous session's upside after Bloomberg News reported that chipmaker approached tech giant Apple about securing an investment. IBM stock rose 3.3 after HSBC announced it had successfully completed the world's first known quantum enabled algorithmic trading trial using IBM's quantum computing technology. All right. Accenture stock rose 0.2 after the professional services company reported fourth quarter revenue slightly above expectations. Starbucks rose 0.2 after the coffee giant approved a restructuring plan involved in the closure of underperforming coffee houses. CarMax stock slumped 11% after the used car retailer's second quarter earnings significantly missed expectations. Interesting. PepsiCo stock fell 0.2, but PepsiCo is up right now, all right, because of what's going on. Let's see here. Lithium America's stock climbed 20% after nearly doubling it in the previous session following a Reuters report that President Donald Trump's administration is seeking up to a 10% stake in the miner. Lithium, ticker LAR, okay? Let's see here. Just trying to see what I care about. Nothing there. Let's move on to the more news. Apple pushes EU to repeal tech rules over feature delays, app vulnerabilities. Trump will sign TikTok executive order on Thursday. Singapore threatens fines for Meta over Facebook impersonation scams. Let's look at how Asia did. Japan's Nikkei marked a record high close for a third session. Interesting. We got, let's see, Chinese blue chips and Hong Kong's Hang Seng advance with Chinese tech shares making their eighth straight week of gains on AI optimism. So Asia is getting love. Okay. See if there's anything else here we got to talk about. So Qualcomm, the company on Wednesday announced a suite of new chips for PCs. Okay, that's probably why it was ripping, including a PC chip with a new security feature for business that analysts say is likely the first of its kind. Yep, that was the move yesterday. All right, let's see here. Freeport McMoran. JP Morgan cuts target price to 46 from 56 following a significant disruption at its PTFI Indonesia mine. All right. All right. I think we're done here. Now, what are we going to look at? A little bit of breath. A little bit of breath action. Let's look at that breath today. 45%. We're really not moving too much. Remember, the overall market was not that weak yesterday. The overall market was not that weak yesterday. Okay? All right. We're moving on, folks. We're going to go right to daily charts, and we're really going to briefly go over these because we just went over a bunch of stuff here, okay? SPY. Let's look at it. Let's look at it. Let's look at this, folks. We just took out, look, boom. 1, 2, 3, 4 daily candles we took out in this day. That day. That day. Now remember, documents, remember this? 9 EMA daily, I said most times you cut through it and close above it. There you go. Now, the next day we're below it. But let's look at futures. Remember that 66.70 that I'm telling everybody about? 66.70 is right here. Okay? Can't lose that. We're losing it. We're losing it big time right now. We're losing it big time right now. Not good. Not a good thing. Okay? This is really not good. Hold on, let's see that day. Yep, this is FOMC. That's FOMC day. This week, folks, we could be down here today. Last week's lows. If we lose the 66.70s, this is going to be panic in the streets. Okay? Panic in the streets. Moving on to the Qs. Qs hit that 9 EMA daily. Also took out 1, 2, 3. Didn't take out this day. Okay? Didn't take out this day. 591.90s. We are 591.90s. We are right here, right now. See this little gap? That's where we're in. All right, let's look at the futures. There's a big void. I'll show you. You can't really tell on this. This is also a demand zone here, a daily demand. Now, the caveat here is this is FOMC. So this is a little like, because FOMC days are wild. Okay? But there's a void. There's not a lot of volume under here. Okay? We're pushing. Just look at this. Lower high. Lower high. Okay? Breaking the low. Breaking the low. Remember what I said before was higher low, higher low, higher low, higher low. Lower high, lower high. Okay? Trend is changing. Trend is changing. All right? Moving on. Look at those hourlies. Look at these hourlies, okay? Let's look at them. We are definitely, geez, this is like getting ugly already. I didn't think we'd see this yet. I did not think we'd see this yet, folks. All right, this is your hourly. Okay, we are breaking the 66.70s. We tested it, and now we're dropping. It's going to get ugly today, okay? Remember what I said. This was yesterday, folks. 67.10s. I said, you can't lose this. You can't lose it. And look what happened. Lost it. Came into the key support of 66.79s. In the overnight, we almost retested this. And now look. Took out those lows. 66.70s. This is your monster level, folks. It is your most traded price of the rolling month. We just came back, and when I started this stream, we were right here. We were ripping down. Okay, you do have a high volume node here around 66. I would probably say 45s, 40 somethings. Okay, that might hold the market, maybe. But underneath that, see this void in the volume? That is not a lot. Look at it. Look at this little stick. That is not going to do a good job of holding that market back. Okay? Let me get you some levels. That level, that high volume node in the ES is 66, call 6650. 6650, that will tell you if we get a pullback there or we blow through it. If we blow through it, pff, woof. Because look at that. That's FOMC, this wick. You think that has much volume in it? No. Okay, pay attention. Now, could we also do one of these? Oh, we get bought. Retest that. Oh, I'm going to look the short. Okay, that's your ES. Let's look at the NASDAQ. Okay, NASDAQ has a void coming up that I want to talk about. Let's talk about it. Boom. Here it is. Here's your beautiful NASDAQ. Now, what did I say yesterday? The 248s. Can't lose the 248s. Well, yesterday we broke it, retested it, ripped lower into this demand, and what did we do? We finally broke that FOMC anchored VWAP. Finally touched it, right? And then we got bought up all the way to here, almost tested the 248s to what? Take out these lows. And now you are inside a gap. This is the gap I was telling documents yesterday that I thought could be filled. Now, this doesn't matter. This is not a fill. This does not matter. Okay? You have to fill it in real-time trading hours. So we're gapping into a gap. Gapping into a gap. Okay? Your NASDAQ, okay, had the void right here. Not much volume. That's why we're just cutting through it. Okay? That's why we're cutting through it. Now we have a little bit of volume here. Look to the left. That's this. But guess what? You take that out. Let's say we take this level out here. Let's just round about. I'm going to round about 245, 25s. Okay? 245, 25s. Okay? If this does nothing and you start to crack that, there is nothing holding this NASDAQ back. You'll just drop. And you can go back to last week's lows in the month-to-date anchor VWAP. Okay? Why? Because this has no structure. Interesting session. I think there's going to be a lot of panic. Okay? There's going to be a lot of panic. Now, the one thing I didn't say in the ES, which I will show, is look what we've been doing. Consolidating, break lower. Consolidating, trend up, make a swing high, consolidate, trend lower. Push back up, consolidate a little bit, trend lower. And you're breaking these lows. Okay? Can't deny that, what's going on. You can't deny it. All right. Moving on. Market profile, volume profile. We'll go over it. Gapping into a gap. This is a huge gap. Huge gap. Monster gap. Okay. Let's look at it together. This is your market profile, volume profile. Big gap downs, I'll say it again, are never easy to trade. Never. Big gaps are not easy. All right, so let's look at our profile. Remember I said there was a bullish imbalance to this profile. Well, that doesn't matter right now, right? All the value is here. 70% of the tradings happened all up here. So think about that. Rolling profile, 70% of the trading volumes here and price is there. Anybody who's long up there is pooping the pants right now. It's not looking good, right? Like I said, you can't lose the 6670s. You can't lose the 6670s. Okay, you just lost the 6660s, which was support. This area now, very important. Okay, then you have that high volume node I talked about here, the 6650. See this big jet of volume here. That's horrible. This could hold the market temporarily. Temporarily. Down here we have last week's lows, believe it or not, 6611s. We're going to put a little marker here. And that includes the anchored VO up for the month. So buyers are still in control. It's green. 6618. That would be something if we tap this today. 6618. Right? We take out this, we should. Okay. Gap fill is 6678. Okay, 6678. That happens to be the midpoint, the 50% retracement of the overnight session. Okay, this is where we're going to talk about right now. So we're going to get right into scenarios. And we're going to go bear side. What's the level I'm looking at today? 6670s. Okay. Now, we're almost, I would say, probably 85 to 90% net short in the overnights. Look at all this volume that was hitting up here. If a poor high up here, we were looking good at one point. Look at this. We were looking real good. And then no good. Right? So, what I want to see, maybe we come down here and we get a nice little rally into this area, 6670. If you do not know that is the most trader price of the month, well, you don't know it, right? But I'm going to look for any type of rejection here. Like this, and then we do this. Yeah, I'm going to look to take out the lows. I'm going to look to go to 6650s. Now, if we take this out, you see the void in volume, right? If we take it out, this could get really ugly very quickly, and this can drop. 6618s, the month-to-date anchor VWAP. 6611s is last week's lows. This is very much in the cards if we hold under 6670 and then 6650. Very much in the cards. Very much. Okay? So, like I said, big gaps are very hard to read. I'm going to say it again. So even that I'm saying this, I have to remember, like I told you guys earlier, I'm seeing SPX credit spread in my future today. If I'm not seeing what I want, because the volatility moving all over the place, I got a level in SPX or gamma level, whatever I use, I'm going to be all right with it. I don't have to worry about being accurate like in a day trade. Okay, I will probably look at that. Okay. Now, if you want to see how I do that today, you're going to join my Discord, okay? So, that's what I'm looking at, folks. Now, what can happen too? We can get a nice little rally. And let's say the market goes and says, wow, we filled the gap. Well, you know what I think people are going to do? Take profits. And then we're going to rip and go back under it, and then you still get that trade. Okay, it's all about 6670s today and the 6650s. Moving on to longs. Okay. Now there's probably a long here. Am I ecstatic about a long? Depends. Okay. What can I see if I want to get long? Well, depends on our internals. But let's say we come down here and we go through the 6650s. And then all of a sudden, the market's not that weak. And I'm like, ooh. And we go up and we hold. Well, you could target 6670. That could be a nice trade. We could still dump after that. Okay? What if we open up and rip up and say the market's not weak. And then we hold 6670. you go to the gap fill. Now, if we start going into this gap, the single prints here from yesterday, we can maybe touch the 66.92s, most of the traded price of yesterday. Now, again, that's all internals driven for me. Remember, my number one thing is probably looking for a short because I think panic's going to be in the streets. All right, that's your ES. Moving on to the Nasdaq. Nasdaq. Look at our Nasdaq. All right, let's lift this up. All right, so we have. Let's just put this here because I'm going to put it on my chart here. Let's put this on the chart. We have a high volume node here, right here. We're going to put it right there. All right, this blue, it's going to become blue. Composite high volume node on my chart. Boom, right there. So now I know the 24528s. I want to see what we do there. All right, I want to see what we do there. We also got another one here. Let me put it on my chart. Right there. That is your 24339s or the 24340s. That was a high volume node from the past. Okay, so those are some markers. We got them on our charts now. Okay, we got them on our charts. So, I mean, I could even do this. Let's see here. Let's just do this real quick. I want to put some marker. Let's see here. Does it not let me do that? I guess you can't do that with the rectangle. You could do that with like a line marker. I guess you can't do that with a rectangle. Okay. Anyway, so we're gapping into a gap. Okay, so let's put levels here. Gap fill 24628s. Gap fill. There's our gap fill. Okay. And we're just ripping through a support right here. That's your 24560s or something. Okay. And we know we have the 24528s here. That's a high volume node. That could hold the market for a second. All right. Now, let's get rid of some of these demand zones. This is a pretty nice demand zone that it broke. Boop. And it broke this one. Boop. Now we have the gap here. Okay, we have a demand zone here. Okay, that could bounce. All right, now your midpoint of today of the overnights 24669, 24669, right there. That's the overnight midpoint, 50% retracement. Okay, we'll see what happens. Now we have our gap, right? We're gapping into a gap. That's a void, right? A void in the volume. But we're coming right up to the high volume node here. Composite high volume node, your 24526s. Okay, then we have another void. Okay, this is where your Nasdaq can really get cooking and panic can really set in. Your 24340s. So how are we going to structure this, right? What are we going to do here? We're gapping into a gap. We're gapping into a gap. Now there's probably a supply zone right here. I just haven't charted it. Okay, let me break it out. I didn't break out the session in the ES, but I'll break out this one. Okay, that's just been dumping. Okay, let's look at it. Let's do scenarios. Let's do a bear side. Let's get into scenarios here. All right, we're going bear side. What are we going to look for today? Okay. Actually, your Nasdaq isn't really too far. It's gapping into a gap. Okay, could be profit taken here. Okay, could be some profit taken here. So, number one, let's go into this area here. Let's fill the gap. Let's get rejected. Long as we're going to take profits. Then you want to see some lower highs. Then you're going to target your 2426s. If you break the 2426s, you have a support in this demand zone. Okay, at 24470s. If the market treats this like it doesn't exist, you're going to rip through all this void and go down to the 24340s. Okay, that's going to cause a lot of panic. Lot of panic. Okay? Now, another way to play it, be a little more conservative. If we just open in gap and go, we go like that, rip through the two fours, 5, 2, 6s, and this is a demand zone. So this might be a support where we rip back, retest this, and then you can fall. Okay? Now again, I have no clue what's going to start out strong. I have no clue if we're going to gap and go fill the gap. I don't know if we're going to, like I said, this is why you do scenarios. All right? Now, bull side. Okay? Bull side. We are holding the 2, 4, 5, 2, 6s right now. We are in the middle of a gap, gapping down. Okay? Are people going to take profits? They are starting to do it a little bit. Okay? So, how would I play this? Well, if we gap and go, I'm sorry, yeah, if we go down, and no one knows about the 2, 4, 4, 2, 4, 5, 2, 6s, and there's a demand zone here. We haven't touched it yet. We haven't tested it yet. A lot of times you can get a jump here. You hold it, you go long, you fill that gap. That's a beautiful trade. That's a nice trade for the NASDAQ. Okay? If you get gravy on top, you go to the midpoint of this session where there's some single prints and try to see if you can hit yesterday's most traded price. Do I believe that happens? I don't think it goes that high, but like, could it do it? It sure can. It sure can. Below this level, I'm not crazy about it, but if we just drove, people are going to probably take profits here. If they do, right, you might get the bounce up to here. Okay? That's kind of it. That's kind of it, folks. I'm done for today. All right? Now, smash the like button. If you enjoyed that analysis, I think I did a pretty good job today of explaining the big levels, what to look out for, how to play it. Big gap downs are hard to trade. I'm not going to say it again. I'm trying to say it for myself because I got to put it in my brain that I remember when we recently just had huge gap downs. I'm searching for a trade. It's like, because it's just so big of a move. The market has to digest it. And then it's wild. It's like a wild stallion. Okay? Now, hopefully, I don't know why you wouldn't subscribe, set an alert to my channel. Let me give you that market story. Let me give you that economic counter, the market news, the leaders and the laggards. Let me give it to you. I'll put it on a silver platter. Okay? Do it every morning. I think I do a good job. I think I do. All right? Getting you prepared for the big levels. What to look out for. Why is our market doing what we're doing? Okay? Why is it doing what it's doing and what it will do if this does that or this does this, right? Okay. Now, if you want to go deeper, more granular, right? Ooh, Nasdaq's pushing lower. Pushing lower. Not surprising. All right. We're about to test those 2, 4, 5, 2, 6s right now. Now, if you want to get more granular, what are you going to do? You're going to join my Discord, Confluence Trading. Right? Let me be your indicator. I will not steer you wrong, folks. I'm not about telling you go long, go short, go long, go short. I'm more analyzing, right? Like, what is driving this market? What do I want to see? Now, if my trade comes to fruition, I will trade. If it doesn't, it doesn't. Now, what I have to remember, like I told you earlier, is I got to use my Batman belt. Right? If I'm like, my day trade's not showing up, I got to start looking at SPX, credit spreads. Okay? Take advantage of my TA. Take advantage of how I can read the market. And I know documents will attest. He sees me. He hears me. Very rarely am I wrong based on scenarios. This is very rare. Okay. So generally, what happens happens. What I think's going to happen. But again, hardest thing to do is trade that. Right. So today, I got alarm set for SPXs to remind me to use that tool. Right. To use that tool. I was an options guy for many years. I still am. And sometimes you get tunnel vision, and I'm like, futures day trade, futures day trade. Meanwhile, I'm like, duh. You can throw an SPX on and sit back. And if the trade comes, it comes, but now you have an SPX on. All right. So, everybody, I hope to see you in my Discord. If I don't see you in my Discord, and remember the expected move indicator. Now, real quick, before I go, let's just check out the expected move to the downside for this week. And this would be for this Friday. Let's see where that is really quickly. Now, if you join my Discord, you have it on your chart. The SPY. So, remember, the expected move to the downside for this week is 653.41. We are at 657.50 right now. We are here. Trust me, you want to know that level, 653.41. Yes, can it look like it goes past it? But 70% of the time it closes inside. 20-day simple moving average is right there as well. Let's look at the Qs real quick. Expect to move to the downside, 586.27, 586. We are at 591.65 right now. We are right here. Again, 20-day simple moving average is at around 584. We could kiss that and close within that on Friday. Be conscious of it. Be conscious of it. I wasn't showing you the chart. My apology. Be conscious of the move to the downside, 586. So expected move in my indicator, you can get on my Discord one more time that I can show you. SPY 653.41 is the expected move to the downside. Also the 20-day simple moving average. Remember to keep that in mind. 657.50 is where we're at now. Qs based on my expected move indicator. Expected move to the downside 586.27. Simple day moving 20-day simple moving average is 584. Keep that in mind. I'll give you the SPX. SPX expected to move to the downside. 65.55. Right there. Right with the 20-day simple moving average. I have that all on my charts. You should too. Join the Discord to get that move. All right, everybody. Have a great day. Have a great day. Stay green. If I don't see you in my Discord, I'll